Hey there, mountain dreamers. I want to talk to you a little bit today about 1031 exchanges. I touched on it briefly in another video. This is probably one of many in a series. I'm going to bring on a guest person to talk about 1031 exchanges, but I want to kind of give you a broad strokes overview and let you know how to use this tax code to your advantage and why we see so much of it in our area. Stay tuned. You're not going to want to miss it. Okay, mountain dreamers, make sure you click the like button and the subscribe button and leave comments below and follow me on all the other channels. Now, real fast, the lawyers want me to tell you that I am not a tax accountant. I am not a tax expert. I am just someone who helps to coordinate these transactions with what's called a 1031 exchange. Now, I'm going to be bringing on some other experts later, and so make sure you stay tuned for those videos. But for now, I'm going to tell you how it works from my end as a real estate agent, as a broker. In my county, in the rural resort market, we have a second home market, meaning it's a luxury purchase, meaning we have a lot of affluent people who this is their second, third, fourth home, or it's an investment property. So when you have an investment property where you're earning income from rentals, so whether that be a long-term rental, like in a primary market of say like a duplex down in Denver, or a short-term rental like a vacation rental by owner or an Airbnb or a professionally managed rental like we have here in the ski resort areas. If it's purely an investment property, so meaning you're getting rental income and you're claiming it with the IRS, that it's a rental property and you're taking deductions based on your expenses and your loan is set up the right way and legally and ethically you have an investment loan. Let's say you purchased a condo from us that's your second, that is your investment condo, and you purchased it a couple years ago for $500,000 and it's been earning you money on the vacation rental market. And you've been deducting and you've been claiming with IRS and you're ready to sell it. And you call us and we tell you, well, guess what? That condo is worth $800,000. And what we hear on the other end of the line is, oh crap, what am I gonna do with that $300,000 gain that I just am gonna realize that I bought it for $500, I'm gonna sell it for $8, I've got $300,000 I have to tell the IRS that I just made. And that means I gotta pay a lot of taxes on it. Well, the 1031 code with the IRS means that you can defer that chunk of income, the gains, and use that chunk to get into a similarly priced condo or house property or larger. So we sell your place for $800,000 and you need to find a new place for $800,000 or higher. It doesn't even have to be in our market. We can send you to our friends in California. I can put you in touch with some commercial people. There's also a way to do it with this thing called a Delaware statutory trust, and I'm gonna have my friend Paul on to talk about that later. But there's ways to find other properties that are just as expensive or more expensive in our market and in other markets. And so what the IRS says is you close on this one property for $800,000, and then you have a predetermined amount of time, a very small window, to identify the new property, and it's called like kind. So it has to be same or more expensive, and it has to be real estate. Used to be you could do airplanes, boats, other stuff, jewelry, that kind of thing, but now it just has to be like kind, okay? So it has to be real estate. So you have a certain amount of time to identify the new property, and then you have an even more defined period of time to close on it. And not only do you have that time frame to work in, so sometimes it's 45 days, the max I've seen is 180 days to close. So you not only have that defined period of time that you have to close with that chunk of cash, you also have to use what's called a qualified intermediary. That's not me. I'm your realtor. That's not my people that work for me. They're your realtors. It's not your bank, and it's not the title company. It's a third, or I should say a fourth or a fifth team member that's holding that money in an account that is just for the 1031. And so you take that chunk of change, you put it into the qualified intermediary's account, and they are making sure that we're all following the 1031 IRS rules, that we're doing it within the time frame, that it's a like-kind property, and that money isn't being used for anything else. So that's what we're doing in the mountains. I would say about 50%, 50, of our transactions, whether they are our listings or our buyers, and whether they are residential or commercial, because we're going from residential to commercial sometimes too. I've seen that happen. So we consider ourselves a resi-mercial brokerage, and then I've seen people do it with ranches. So I've been working a lot of ranches recently too. So it's an added layer of intricacy with the real estate deal that you really need to make sure that you're hiring a professional realtor that knows how to work 1031 exchanges, because if you screw this up, you're in trouble, you're in hot water with the IRS, and this is no joke. But again, you know, I'm not an expert in terms of the tax and the accounting process. I just know the broad strokes overview, and I know that what we have to do as real estate agents and the way that we have to write our contracts. And I know what I have to do as a broker owner to make sure that my agents know what they're doing when we're transacting this type of coordination. We have to make sure that we have the best team members in place. We have to make sure that we're working with a qualified intermediary that knows what they're doing, that they're not just some new kid on the block that says they're gonna hold your money. We have to make sure we're communicating with the title company. We have to make sure that we're communicating with your lender if you have one, or with your private banker, whatever it is. We're working at like a higher level than just your regular everyday real estate transaction deal. And so we take it very seriously the minute that anyone says, I've got 1031 money, because we know when you're coming to the mountains with 1031 money that you're on a time frame, and that we've got to get you where you need to be in the time that you need to be there. And if we can't find the product for you, if we can't find the actual property because our inventory is so low, we're gonna help you find that somewhere else, whether it be in another state, whether it be one of those Delaware statutory trusts I was telling you about. We're gonna help you get you where you need to be. We're gonna help you defer those taxes if that's what you wanna do with the 1031 code. And we're gonna do it in the best, most professional manner that we can, because we love working with you guys. We love working with those of you who understand these types of situations or are willing to learn. We love working with this type of money because it means that you know how to have your money work for you over time, and you're doing your tax planning accordingly. And if you do the 1031 exchange the right way, you can just exchange it your whole entire life. And I've seen people hold real estate inside their Roth IRAs doing 1031 exchanges so that their money is growing exponentially, and they're deferring their taxes until the day that they die. And then there could be ways, even then when you set up your estate, that you're deferring your taxes even more there. So anyways, that's how that works in our area. It's a big factor in our resort and rural markets. And if you have any questions, leave them in the comments below. If I don't know the answer, I'm gonna reach out to one of my expert advisors and let them answer, and I'm gonna do some more videos for you. Thanks again for watching. Please make sure you like this video and go find me in other places, and call me if you need any help with real estate in the state of Colorado. I'd love to be able to help you. Bye for now.